I read The Best Loser Wins by Tom. Yeah, and here are 55 screenshots I took of the best moments that helped me and hopefully will help you. Of course, buy the book and read it for yourself. Let's go. Tools do not make you a top trader. Yes, of course you need a strategy. Yes, you need a plan. Yes, you need to understand the markets. So, what is this book all about if it is not about tools and strategies? Well, let me address that question from a different perspective. Let me address it from the perspective of the people who work in the industry as brokers and sales traders and as marketing people. Do they trade? I would say it is likely they do not. Yet, traders are taking advice, guidance, and training from them. They're being guided by people who are no better at trading than they are. Sounds like something I've said before. Traders are being guided by people who can't trade. Oh, you didn't like when I said it? What about when one of the greatest traders in the world said it? Sorry, I promise not to be petty. I'm just kidding. I'm gonna be petty. I'm gonna be petty as fuck. This section here is about how it's never been easier to trade. So why is it that traders are so bad at trading? Are you thinking like everyone else is thinking and approaching trading like everyone else is approaching trading? If so, you will have a problem. Yes! If you think like everyone else, is it so strange that you get the results that everyone else gets? Normal behavior is to engage in a never-ending cycle of education, looking for the next new edge. That is literally my video. Every video I've ever made on my channel was made before I read this. I know it's gonna look crazy that half of my videos are things that Tom talks about in this book, but I promise I've never read this before. Let me be clear. Reading a book like Technical Analysis of Stock Trends is a must, but please don't think that it will make you a professional, profitable trader any more than reading a manual on tennis will enable you to compete with Rafa Nadal. I think that many of the 90% of people that lose money trading may very well have excellent chart reading abilities. They can read charts very well, and they understand patterns too. Okay, yeah, when I saw this, I was like, no way. The video on the screen is about cognitive dissonance. Cognitive dissonance is the mental discomfort, psychological stress, experienced by an individual who simultaneously holds two contradictory beliefs or ideas in their head. When confronted with facts that contradict beliefs, ideals, and values, people will try to find a way to resolve the contradiction to reduce their discomfort. The best way for your rational mind to resolve the discomfort of a profitable position is to close it. The best way for the rational mind to resolve the discomfort of a losing position is to let it run. Say you set yourself the ambitious target of running a marathon. You achieve this goal by building up your body and mind for the task. Trading big size is exactly the same process. You need to give your mind time to learn to handle the mental anguish that comes from losing when the stakes are bigger. There is no point in comparing yourself with others. Sure, take inspiration from others, but know this is a personal journey, and your job is to achieve an equilibrium mindset no matter what size you are trading. The first part of that, in psychology, is referred to as systematic desensitization. It's how therapists help clients with phobias. The way to overcome fear is that you slowly become desensitized to it. There's no magic pill or anything. You just take it one step at a time. Sizing up, and just trading in general, is no different. I come from a home where you rarely received praise for your achievements. They were expected. The failures, on the other hand, were pointed out, and not in a constructive manner. I remember when I cried in middle school because I got a B on something. That? Anyone else? Do you want it bad? Sorry, how bad do you want it? Is this journey for you? I don't know. Only you can answer that. The brain sends a signal to the eyes to ignore the setups that do not work. This selection bias creates a distorted image of the validity of trend lines. You can replace trend lines with any other analytical tool from your charting package, and the bias will remain in place. Fibonacci, Bollinger Bands, Keltner channels, etc. Your eyes will only see what they want to see. At best, they may see the losing trades, but they glance over them, diminishing their significance. When candlestick charts became a hot topic in the 1990s, one person, who had been instrumental in the propagation of their use, was sitting in a restaurant somewhere in the world with another high-profile trader and me. The central character had at the time published books on the use of candlestick charts. As we sat in the restaurant, I asked him if he believed that some of these patterns had to be identified by different names, when they were practically identical. I asked him if he had a favorite pattern he used or a selection of preferred patterns he stuck to, and, if so, what time frame he traded them on. He answered that he wasn't trading the patterns. Not only that, but he also conceded that he didn't trade at all. I don't know how you feel about that, but it doesn't sit very well with me. I immediately cut all ties with the gentleman. I felt as if his only mission was to invent as many patterns as he possibly could in order to fill pages in books and courses and create alerts on his trading software. Am I arguing that candlestick charts are worthless? No. I just don't believe that there is statistical relevance to all the patterns. I think Tom is taking a pretty neutral position here, but I'll say it. I'll say it again. I think it's the dumbest thing that I've ever heard in all of trading. Oh yeah, I went long there because there was a bullish hammer on my 27.4 second chart. The dumbest concept in all of trading, that the shape of a candle is indicative of what will happen next. And I will stick by that until I die. And if I come back to life, I will still stick by that. Actually, you know what? While I'm dead, I will still believe that. There's nothing wrong with technical analysis and patterns, and candle formation and indicators and ratios and bands. Yes, I don't believe in many of them, because they are subjective and don't hold up under real scrutiny. But then again, trading is so subjective anyway that we don't need to be right very much to make a good living from trading. The problem I have with this, not that there's anything wrong with it, is that beginners who don't understand the complexity of trading are going to use this as confirmation bias. They'll just completely ignore everything that's being said and only pay attention to the last sentence. Over the last 30 years, only 50.4% of all closing prices were higher than the previous day's closing price. This means the distribution of plus days and minus days in the Dow index is evenly distributed. The ramifications of this statistic is that day traders like me can't rely too much on the trend on the higher time frame, because virtually anything can happen down on the 5-minute chart. No amount of hard work, resolve, or prayer will turn a bad trading position into a good position. Either the market agrees with you or it doesn't. It doesn't matter how rich you are, how big and powerful you are. If the market disagrees, it disagrees. It can only hurt you if you let it hurt you. The market will rally. The market will fall. Whether you are on board or not, making money or not, is inconsequential to the market. It knows nothing about you. In other words, the market doesn't care about you. Okay, I included this one because I was losing my mind at how often he said things that I've said. And then we get to this one, where in my original supply and demand video, I said this about surfing. To identify where these big waves are building up, and then we ride them to their destination on shore. And when we get back into the water, we have a general idea of where another wave is probably going to start again. Which is almost exactly the same as what this says. What? It's freaking me out. Okay, this is the pain chart. This is, I think, some of Tom's most important work in terms of his impact on helping traders. I'm not going to go over this a whole lot, but you should pause and read now. Essentially, avoiding pain seems to be the driving force of all of our decisions that negatively affect us while we're trading. This is a huge eye-opener. I accept that I am a human ruled by emotions. I understand that I can't escape emotions, and nor should I try to escape them. Rather, I want to help you understand your fear, why it is there, and how to become friends with it. The greater understanding you have of your opponent, the better you are able to understand what she is doing. I use the word opponent here, but really, the market, she is my friend. I want to dance with her, but I am afraid of making a fool of myself. So, I study her moves. Incidentally, I'm not the only one who works like that. I read that Michael Jordan and Cristiano Ronaldo thrive on negative talk about them and their performance. They take that on board, and it acts as fuel to propel them to greater achievements. Unfortunately, no one writes about Tom Hougaard and his trading, so I recreate the situation by putting myself through my past bad trades. I've experienced a lot of negative talk since I trade in a way that seems to offend the majority of traders who are unprofitable, but whatever. Their negativity fuels me, and I have proved them wrong on a note stuck to my monitor. You can go watch my live trading videos in the description. Complete transparency and honesty. 71% of all Dow index positions were short positions on a day when the Dow made fresh new all-time highs. This is why the 90% lose. We don't see the market for what it is. We see it as we are. A chart is only as illuminating as our ability to keep out preconceived ideas of the direction of the market. We're not losing money over time because we don't know enough about technical analysis or the markets as a whole. We lose money because we refuse to accept what is right in front of us. What is the correct behavior? Well, why don't we observe what everyone else is doing and then do the opposite of what they're doing? I said that. I have two fundamental arguments against taking half profits. 1. The market agrees with you. Let it ride. 2. Since I don't believe in the risk to reward argument, because no human being can know in advance what their reward will be without limiting themselves, I don't believe that taking half profits is the right way to trade. Did I just say that I don't believe in the whole risk to reward argument? Yes, that is correct. I do not. I believe in defining my risk. I don't believe in defining my reward. My take on this is that this is perfect for the way that Tom trades, but this wouldn't work well for my trading strategy. I go for the little moves in between major structural changes. So, I would lose a lot of money if I listened to this part. But, once again, this is just for Tom's system, and for systems similar to it. Nice, more confirmation bias that I'm on the right track. I use a measure called average true range. When using it, I carefully differentiate between periods in which I don't want to trade the product and those in which I do want to trade the product. What would cause you more pain? For me, the most pain comes from not taking a trade because of hesitation or fear and then watching it go in my favor. That's way worse than being wrong. This is why I say that you should buy strength and you should sell weakness. Buy high, sell higher. Sell low, buy back lower. Will I miss the absolute turning points? Yes, I will. Top pickers and bottom pickers soon become cotton pickers. I like that. Forget cheap. Forget expensive. It's just numbers on a page. Tom's approach here to this is based on an analogy he likes to use with the supermarket, that our brains are hardwired to search for deals, buy things when they get cheap, but we can't bring those ideas into trading because there is no cheap or expensive. They're just numbers. The amount of times I've been trading and I've said, it really can just keep going down or up while I watch it go 50 points without me just because it just kept going up. That's something I gotta work on. This is his take on bargain hunting, catching falling knives, investing in failing stocks. It is akin to firing the CEO of a successful Fortune 500 company and betting your money on the junkie turning his life around. Crude? Yes. The junkie might turn his life around, but I think the odds of the CEO continuing his successful run are higher than those of the junkie turning a corner for the better. That's why I'm arguing that trading is so much more than technical analysis. That is why I'm arguing that we need to learn to handle losses a lot better than the general population does, because they handle them very poorly, and as a result, they are generally unable to make money from speculation. Being a good trader really has little to do with tools and charts. It has a lot to do with fighting our humanness. If you really want to trade the markets using leverage, engaging in high-octane speculation, you have to learn to desensitize your normal emotional response mechanisms to fear, greed, and other delightful human reactions. You have to fight your humanness. This section here is Tom talking about using disgust as motivation. Positive intentions, sticky notes with mantras on my trading monitor, and self-help exercises don't possess nearly the motivational force of physical disgust with oneself. If disgust can turn eating into a behavior to be avoided, and if disgust can turn an alcoholic's drinking into a thing of the past, then disgust can also turn you into the trader you'd be proud of looking at in the mirror. Hey, whatever you use as motivation, as long as it is relatively healthy, go for it. I don't like this metaphor, but being good at the technical part of trading is like being good at putting together a sniper rifle. What good does that do you when you go into combat and you don't know how to handle yourself? Excellent. This is after a story about a prestigious surgeon losing $750,000 on forex. Or euros, I don't know. Whatever. Education means very little in this industry. It doesn't matter where you went to school or what your day job is. If you don't know how to handle a losing trade and then a winning trade, you will not go very far in this arena. It is for this reason that I tell people to spend less time on technical analysis and more time on self-analysis. Trading can be a very lonely business. This is the topic of my introvert versus extroverts video and how that relates to trading. Personally, trading is perfect for me. I hate talking to people. So being alone is perfect. Just me and my fiance. There will come a point in your career as a financial trader where you will go through a slump. When it happens, it might serve you well to step back and think deeply about why you are so drawn to this game. What my slump taught me was to slow down. If you do not slow down and let the knowledge mature, then you will take a huge loss, which will dent your confidence. Not every trade is the World Cup final. Not every trading session is the final exam of the final year, the culmination of 4 years of relentless studies. Everyone has setbacks, and all slumps end. Is there a key to escaping a slump? No. How you feel about failure will, to a very large degree, define your growth in the trajectory of virtually every aspect of your life. You may want to close the book and think about that for a while. It is quite frightening how deep that sentence is. Alright, here's another thing that kind of freaked me out, because this whole thing is about being process versus results oriented, which is something I've pushed almost from the start of when I began making videos. We didn't actually focus on the outcome at all. We just did everything we could to make the process as efficient as possible. Does that remind you of something? If you have a goal that you want to make X amount of money a day, or a certain amount of pips or points, you might be sabotaging your chances of making a lot of money. You are outcome oriented. You would benefit immensely from shifting your your focus to being process oriented. I have no secrets. I have no special abilities, with the possible exception of one. Do you want to know why I'm so good at trading? I am exceptionally good at losing. When speculating in financial markets, the best loser wins. And it was at this point where I realized what the title of the book actually meant. The best traders are the ones who are best at handling losses. That's part of what separates them from everyone else. I don't know about you, but I certainly have improved at handling losses. Neurobiology has shown we experience a financial loss 250% more intensely than an equivalent financial gain. That is crazy. I win. Move on. I lose. Move on. Well said. The key. If you want to succeed in an endeavor where 90% are failing, you have two choices. You can study the large 90% losing group and do the opposite of what they do, which is what I do and how I found something that works for me. Or you can replicate what the 10% do, which everyone thinks they're doing, but they're not. They're following the words of people who most likely don't even trade, which is something I'm glad Tom agrees with me on. Tom's so cool. If you are not as successful as you want to be, sooner or later you need to change your behavior. It doesn't matter if you've been trading unsuccessfully for 3 months or 30 years. You are much closer to success than you realize, unless you think the shape of a candle. Sorry, never mind. This will feel very uncomfortable, but it is a discomfort you must accept and embrace if you want to succeed in the game of financial speculation. It is the reason why trading looks simple, but it is not easy. The paradox of trading is this: by doing what the 90% cannot do, you will become successful. In other words, I expect to be uncomfortable. I expect my trading to cause me anxiety. I am waiting for it. You don't judge your system on the merit of one trade. You judge it over many trades. We do so because even a game of heads and tails will show an uneven distribution, even if the outcome over 100 flips is 50-50. There is randomness in the outcome of 1, but there is order in the outcome of 100. This is something Mark Douglas talked a lot about, and I have a video on that as well. You need to trust that you already have all that you need. Otherwise, you will not bridge the gap between what you know you can achieve and what you are achieving. You need to believe. The belief comes from doing. This one is super relevant to me. Without a doubt, one of the greatest flaws I saw traders exhibit during my decade on a London trading floor was the idea that it is too late to join the trend. It was a common occurrence during trend days to witness clients continuously try to find the low of day. On those days, our clients lost the most. If the market was rallying, they would either do nothing or they would try to find a place to sell short. If the market was falling, they would do nothing, but more likely they would try to find the low of the day and buy. Considering the action was so common across such a large group of individuals, I conclude that there is an inherent trading flaw in our thinking which makes us want to go against the trend. I have previously mentioned this supermarket mentality, which compels us to seek value. Another reason this behavior is commonplace is because of the prolific use of chart indicators that display what is technically known as overbought and oversold price levels. The use of overbought and oversold indicators has a terrible track record in trending markets. To my mind, patience is a skill set that can make the difference between being an abject failure or a wizard. I used the word skill set because I believe that patience can be developed. Alright, here's another one of something I've said a ton of times. I sit quietly in a comfortable position and I observe my breath. I breathe in for 7 seconds and I breathe out for 11. I repeat. I will do as much or as little as I need to feel calm coming over me. Sometimes it takes 5 minutes, sometimes it takes 15 minutes. I use breathing techniques to calm down a little bit, but the problem for me is that my trading sessions last anywhere from 2 to 5 minutes, so I can't take 5 minutes to take a break. My entire trading session lasts shorter than most people's breaks. I sit with a blank piece of paper and I pose a question. It could be, why am I afraid to join a downtrend after it already started? I write down everything that appears in my mind. I sit with my eyes closed and I observe my thoughts. I do not censor myself. I just sit and ask and listen and write down. I may write for 10 to 20 minutes. What often appears on paper are thoughts straight out of the psych ward. It scares me at times how brutally to the point and honest the answers can be. It can be quite horrifying to read the things the subconscious mind brings up. I don't judge. I accept. This is referred to as free writing, which I've done a few times. I don't know if you've ever done this, but Tom's right with the straight out of the psych ward comment. Write for 10 minutes without pausing. The only rule is that you can't stop. You just keep writing no matter what. And when you read that back, you'll be like, what the fuck is wrong with me? Or you can bring up some stuff you're trying to forget. Alright, here's some Mark Douglas stuff. Every moment is unique, and you are no longer drawing associations between this moment and another moment. You are pain-free. There is a random distribution of wins and losses. You accept the outcome as if it were a coin flip exercise. You don't have to know what will happen next to make money, so you trust the process and you focus on controlling the only variable you truly can control, which is how much you want to risk on the trade. I once sped down the Autobahn doing 186 miles an hour. Yes, it was reckless. Whilst doing it, I wasn't wondering if there was milk in the fridge or if I had remembered to floss my teeth this morning. I was in the moment, focused. That is what I want to bring to my trading every day. One time I went 114 miles per hour on the highway because I was wondering if clouds are at different elevations because they weigh different. Yeah, I don't know. I know I could Google that, but I'm not going to. Process is everything. Don't focus on the goal. Sure, know what the goal is, but focus on the process. I trust. The research underpins the trust. The trust supports the patience. The patience is underpinned by the mental exercises, and it nourishes my confidence. My internal dialogue is driven by a process-oriented mindset fueled by my confidence. I focus on what I can control, my mindset, my risk approach, and I let the market do what it wants to do. Whatever it does not fuel the fearful side of my mind. That has been trained away. I am not afraid of the market. The only thing I am afraid of is that I do something stupid in the market. As I trust myself, this does not happen. A trading life is not defined by what we do every now and then, but by what we do over and over. The one who is best able to lose will win the game of trading. I have described a process that works for me. It is based around my particular beliefs. Those beliefs are the result of my particular life circumstances. I believe that beliefs are defined by one's own desires and needs. As a result of my desire to be a profitable trader and my need to create financial stability in my life, I have acquired beliefs that are consistent with this goal. That said, I accept that my way is not the only way. I don't describe the way. I describe my way. Ooh, that's great. Whatever you decide is right for you is right for you. Trust it. I didn't get into how he specifically talks in the book about how he adds to winners because I feel like that's his bread and butter. That's his thing, you know? No one is going to describe that better than him. Of course, I recommend that you buy this book and read way more than just the little snapshots I took from it, which I hope is legal.